This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Friday as a weak U.S. jobs report dimmed the outlook for energy demand, while swelling supplies may grow further after OPEC and allied producers meet over the weekend. Brent crude futures settled at $65.50 a barrel, down $1.49, or 2.22%. U.S. West Texas Intermediate crude finished at $61.87, down $1.61, or 2.54%. On Wednesday, Reuters reported that 8 OPEC+ producers will consider raising production further at a meeting on Sunday. U.S. crude inventories rose 2.4 million barrels last week, rather than falling as analysts expected.
The European Union is sticking to its plans to phase out Russian oil by 2028, the bloc's energy chief told Reuters on Friday, adding that he had not faced pressure from Washington to bring forward this deadline. As U.S. President Donald Trump seeks to end Russia's war with Ukraine, he told European leaders on Thursday to stop buying Russian oil, a White House official said, without specifying a date. As Russia's most lucrative exports, its fuel revenues have helped Moscow to fund its war, and the European Union is negotiating legal proposals to phase out the EU's imports of Russian oil and gas by January 1, 2028.
Moving on to the top news in the energy sector.
India will continue to buy Russian oil as it proves economical, its finance minister said on Friday, despite the Trump administration's decision to impose heavy import tariffs on Indian goods due, in part, to its energy purchases from Moscow. As Europe and the US have shunned Russian oil over Moscow's 2022 invasion of Ukraine, India has taken advantage of discounts on Russian output to become the largest buyer of Russian seaborne crude. US President Donald Trump, who is seeking to broker an end to the Ukraine conflict, has said India's oil imports are helping fund Moscow's war effort and imposed a 50% tariff on imports from India last month.
The Canadian government on Friday promised hundreds of millions of dollars and less onerous regulations to boost biofuels production, which the country's agriculture minister said faces tough U.S. competition. Prime Minister Mark Carney made support for biofuels and the canola industry one of 6 areas highlighted in an aid announcement designed to help companies deal with damage from U.S. tariffs and trade disruptions. "We have the U.S. flooding the market with cheaper products, and we've got to do more for our guys here to ensure that they can continue to operate until we get clean fuels regulations amended," Agriculture Minister Heath MacDonald told Reuters. Next, we have the top news in metal markets. Gold's powerful rally took on fresh legs on Friday, with prices just cents away from $3,600 per ounce, as weak U.S. jobs data further raised expectations for bullion-supportive Federal Reserve rate cuts. Spot gold was up 1.4% at $3,596.55 per ounce, as of 2:47 p.m. Eastern Daylight Saving Time, 18:47 GMT, having hit a record $3,599.89 earlier. The metal is now on track for its strongest weekly gain in nearly 4 months. U.S. gold futures for December delivery settled 1.3% higher at $3,653.30. Bullion has surged 37% so far this year after a 27% gain in 2024 driven by U.S. dollar weakness, central bank buying, a softening monetary policy backdrop, and wider geopolitical and economic uncertainty.
Copper prices were steady on Friday, supported by the US dollar falling sharply after a crucial jobs data indicated that a Federal Reserve interest rate cut later this month was likely guaranteed. 3-month copper on the London Metal Exchange was unchanged at $9,893 per metric ton by 16:01 GMT. The contract touched a 5-month high of $10,038 on Wednesday when US rate cut expectations widened. Lower interest rates improve prospects for growth-dependent metals, while a weaker U.S. currency, last down 0.6%, makes dollar-priced metals more attractive for other currency holders.
We will now look at the top news in the agricultural sector.
Corn futures retreated from a 6-1/2 week high on Friday as early short covering support faded and traders squared positions ahead of next week's monthly U.S. government crop supply and demand report, and as farmers prepared to harvest a record crop. Wheat also eased after posting early gains, while soybeans resumed their downward drift as the market focused on a lack of U.S. soy purchases by top importer China. We made kind of a high on the up move going into the weekend, and that opened the door for some liquidation on corn and beans, said Matthew Wiegand, a broker with Futures One.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.